Hey guys, Crystal Brady here, your expert in all things real estate. I would like to talk to you today about some things you can do if you're trying to buy your first home that are going to help you with little to no money down and keep your out-of-pocket costs down. So, the first thing I want to explain to you is that when you're purchasing a home, a lot of people focus on the down payment and how much money you have to put down, but they forget you also have closing costs when you're getting a mortgage. So you've got two components that equal your total cash to close. Your down payment, which is usually anywhere from, it can be zero down all the way up to 20% down, depending on which loan program. And then you have your closing costs, which are usually about another 3% of the purchase price on average. So we can't get around the closing cost, okay? If I find you some great programs that are zero money down, you still have to contend with the closing costs. So at minimum, you're gonna have to think to yourself, I need probably about 3% of the price of the home to pay in closing cost. But let's tackle the down payment part first, okay? So there's a few different loan programs that are zero money down. So the down payment portion would be zero. There's one called a USDA loan, and that's going to be for rural areas. So it's dependent on where the home itself is located. There's a USDA eligible map online, and you can go see if the house is located in a USDA loan area. If it is, you could do that type of financing if you qualify, and you would have to put zero money down. There's also VA loans. Those are going to be for our veterans, anyone who is active or retired former military. They can take advantage of this benefit. So those folks can go get a VA loan, and that also would be zero money down. Now for lower down options, we do have a couple of other things you could do if you don't qualify for USDA or VA. You could do a conventional loan, and if you're a first-time buyer or you have not owned a property in the last 3 years and you have a good enough credit profile, you could do a 3% down conventional. So with as little as 3% down, we could get you into a home. And then there's always FHA, which is what a lot of first-time buyers do tend to gravitate toward, because that one is 3.5% down as a minimum. So for the down payment portion, we might be able to get you zero down all the way up to about 3.5%, which is pretty low. Now we still have to contend with those closing costs. So let's talk about some ideas on how we can tackle the closing cost. As I said before, closing costs are usually about 3% of the purchase price. So there's a few things you can do here. If you don't have that money in the bank, you can borrow from a family member and get a gift for the funds. Whether you decide to pay them back or not, the loan officer is going to look at it like a gift. So if you have mom or dad or somebody that can give you that money to cover your closing costs, that's going to be an option. Another option is you could try to get the seller to pay money toward your closing costs through negotiations. However, I'll be very honest, in our current market, that's probably not realistic. There's a lot of bidding wars and multiple offers on homes right now, so I wouldn't count on being able to do that. There's also one more option that you could consider, and that would be borrowing or taking out money from a 401k. So a lot of people have great jobs, good income, good credit. They just don't have quite enough money to get into the home, but they do have a 401k through their job. So if that's you, you can go ahead and borrow money or take a distribution from your 401k and use the funds toward your closing costs that way. So I hope that gave you some good ideas on low to zero money down options and some hopefully new ideas on how to get your closing cost covered. If you have any questions about financing, please reach out to me. I'd love to connect you to a local lender. Thanks.